Good morning everyone and welcome to our webinar on Indian pharma industry performance for the month of May. Thank you everyone for joining on this Monday today and the content of the presentations. So the contents of today's presentation would be the IPM therapy performance, the overall performance, the growth drivers. We also look at the growth outlook for the year Jan-December 2022. After this, we will be looking at the top 40 companies and some more upcoming corporates because we usually focus on top 40, but then there are many other companies beyond top 40 which have really done well in the last 4 years. We also look at the top 40 brands, key takeaways, and from this month, we are starting a new initiative wherein we will be having webinar on interesting topics. And the webinar on 20th June would be on partnerships on Indian pharma industry. We will be just taking you some brief points on this webinar. Coming to the IPM therapy performance, the Indian pharma market growth for the month of May 22 has been relatively better, given the fact that May 21 month growth was around 48%. So if I were to just focus on the month May figures, the value growth of the market is around minus 3.3%, whereas the unit growth is minus 10.4%. Given the fact that the market had grown by around 48%, we had actually expected a value degrowth of around 10%. However, the market has shown a value growth of minus 3.3% only, whereas the unit degrowth is close to minus 10%. Now, this indicates that there may be certain component of price growth which may have supported the growth of the market. We will look at the growth drivers in the consecutive slides, but what we need to look at is which are the therapy areas which have managed to still grow in these circumstances. So if you look at the derma, neuro, and the gynecological portfolio, these three portfolios have grown well, and collectively these three portfolios or therapies, they contribute to around 18 to 20% of the IPM. The rest of the portfolio, which contributes to around 30% of the IPM, which is the anti-infectives, the nutritionists, the respiratory, and the hormones, these four portfolios, they contribute to around 30% of the IPM. And they are the ones which have degrown significantly in terms of value as well as units. Now, this degrowth is not a surprise because May 21 was one of the months which was among the peak of the COVID same time last year. And in that period, these therapy areas had shown a significant triple-digit growth. And that's the reason why this double-digit degrowth in terms of value as well as units for these therapy areas is quite expected. After looking at the therapy areas, we look at the growth drivers. What is driving the growth of these therapy areas today? So if I were to look at the month growth drivers across key therapy areas, I haven't taken all the therapy areas, but the key therapy areas. For the month of May, we are seeing that volumes have driven the degrowth of majority of the therapy areas. On an average, the IPM shows the price-related growth. I will just take you through what is this breakup of the growth drivers. NP growth is the new product growth, the new introductions which are driving the growth of the market to what extent. Price growth is the growth because of the price hike, and volume growth is the growth because of the increased demand of the existing products. In volume growth, we remove the new introductions and we keep the same products which were there available last time as well. So if I were to look at the growth drivers, price-driven growth, which on an average for the IPM is around 5%, in certain therapy areas, the price-led growth is slightly on a higher side. If you see gastro, the price-led growth is close to 7.2%. If I look at the pain portfolio, the derma portfolio, the opthal, the urology portfolio, these portfolios, the price-driven growth is on a slightly higher side. The advantage of certain portfolios like opthal, urology, derma, along with the price-led growth, they are also having a strong volume-driven growth as well. So wherever we have volume-driven growth, price-driven growth, and new introduction growth, It is indicating that the demand in the market is on a higher side or is satisfactory. And along with the demand, the price hike is also fueling the growth of these therapies. Now, this was only for the month of May. How does the picture look for MAT? In case of MAT, since we are looking at the performance of the IPM for the entire 12 months, we see that the volume driven growth does not seem to be that drastic as it is looking for the month of May, because this month of May 22 is against the peak month of May 21, which was the COVID peak month. If you see over here again, we see a similar scenario wherein for the MAT period, we are seeing price driving the growth of majority of the therapy areas to a significant extent. Then what we did is, we thought about looking at certain therapy areas in detail. Because when we are talking about in cardiac, just an example, in cardiology therapy, the price-led growth is close to 5.4% and the volume-led growth is minus 7% or minus 6.9%. Does it really hold true to all the sub-super groups or all the key therapies within the cardiac therapy? So what we have done is, just as an example, we have taken 6 therapy areas, 6 top therapy areas, which contribute to around 60% of the IPM. And we have looked at how does the picture look for those 6 top therapy areas. So when I'm looking at the cardiac segment, we have just looked at antihypertensives, the cardiac therapy, and the lipid-lowering drugs. The antihypertensives, they contribute to around 60% of the cardiology market, the cardiac therapy around 24%, and the lipid-lowering drugs around 20% of the market. If you see, against the 5.4% price-led growth that the cardiac therapy has taken for the month, we are seeing the antihypertensives and the lipid-lowering drugs, they have taken a relatively higher price-led growth. In case of lipid-lowering drugs, the volume-driven growth is also significantly good. So positive picture seen for the lipid-lowering drugs. In case of cardiac therapy, this therapy is typically the therapy which had actually become very prominent during COVID times, during second wave, because it had those anticoagulants, heparins, rivaroxaban, apixaban. These are the molecules which were prominent in terms of demand same time last year, and this is the therapy which has gone down significantly. Also, price hike is not seen in this therapy at all. When I look at the MAT numbers, I see a relatively positive picture for cardiac therapy in terms of price hike, because they could take the price hike. The degrowth seems to be on a relatively lower side at the MAT numbers. Coming to the next therapy, we look at the anti-infectious therapy. In anti-infectious therapy, obviously, majority of the molecules were in high demand. The therapy itself had shown a triple-digit growth in the month of March 21. So obviously now the therapy is going to degrow. In the anti-infectious therapy, the antibacterials, they contribute to around 80% of this therapy, antifungals around 7%, antivirals another 7%. The good part is, though the antibacterials for the month of May, they have shown a degrowth. However, for the MAT period, all the growth drivers for the antibacterials are on a positive track. Also, though on an average, the anti-infectious therapy at a MAT level has shown a price-led growth of 3.5%, the antibacterials, which is close to 80% contributing segment within the anti-infectives, have managed to take a slightly higher price-led growth. Also, combined along with that, we are having a strong or a positive volume-driven growth in the antibacterial segment. Coming to the gastro segment, the segment which has shown close to 8% growth for the month and close to 10.7% growth for the MAT period. If you see, majority of for the MAT period, all the parameters or all the growth driver components are positive in majority of the segment. Though for the month, it is the PPIs, the hepatoprotectives, and the antacids which are showing a degrowth. Good part about the gastro segment is, look at the price-led growth. Hepatoprotectives have managed to take a 7.4% price-led growth, laxatives around 7.8%, probiotics 7.6%, antidiarrheals 8.4%, and antispasmodics around 9.4%. Now, within the gastro segment, there are actually many supergroups or many subcategories, but we have focused only on those categories which contribute to around 80% of the gastro segment. So gastro segment, majority of the categories have managed to take a very good price hike. So if you are existing in these categories and have not taken the advantage, the market is positive and many of your competitors have managed to take this price growth. Coming to the anti-diabetic segment, it is majorly the OADs without leptins or SGLTs, the traditional SU and SU meds, which have taken a significantly higher price-led growth. Obviously, because of patent losses, we are seeing a new product related growth in the SGLT and the leptin plus SGLT2 segment. GLP-1 agonist, we have new introductions which are driving growth. But then majorly it is the SU plus med segment which has managed to take a price-led growth in the anti-diabetic segment. The last two segments that we will be looking at would be the vitamins and the respiratory segment. Vitamins, if you look at the vitamins segment, vitamins and antioxidants collectively contribute to around 50% of the nutritional segment. Same time last year, the demand was very high. Here, if I look at the volume-driven degrowth, the volume-driven degrowth is significant. For the MAT period, the volume-driven degrowth seems to be coming on the lower side. None of the subcategories within the vitamin nutritional segment have managed to take a significant price hike except the calcium products. So it is the calcium products where I'm seeing a good price-led growth for the month as well as for the MAT period. Coming to the respiratory segment, cough and cold market, which contributes to around 40% of the respiratory segment, has shown a significant degrowth, again, the COVID phenomena. But then for the MAT period, the cough and cold market has shown a very good growth. And if you look at the price hike or price related growth, goes to 9.1% for the cough and cold segment and around 7% for the systemic antihistamines. However, it is the cough and cold segment which is contributing to around 40% of the segment and anti-asthma another 40%. So this is almost 80% of the market in the respiratory segment. Coming to the growth outlook. So based on all these studies, what we had done is we had looked at how the different parameters are impacting the growth drivers of different segments, how the different categories within each of the therapy areas is getting impacted, and we have arrived at growth outlook. I wouldn't say that, this is something which would definitely happen, but things keep changing. But if I were to look at the long-term trends of the market, and what has been happening in the last 6 months from the month of Jan till the month of May, and what is expected, combining the long-term trends, the COVID disruption, and how the market has behaved in the last 4 to 5 months, then we have come out, looking at all these three things, we have arrived at growth outlook for the year Jan-December 2022. So, just even before going to the numbers, we are looking at two things. We have looked at how the IPM has evolved in the last 4 to 5 months, for last 5 years, last 6 years, in fact, from 2016. What has been the value of the IPM? What has been the value of the top 10 categories within the IPM? And what is the incremental that the IPM has shown? So 2017, these numbers in green are the incremental over the last year. So 2017 over 2016, the incremental of the IPM was around 5,000 crores. The incremental almost doubled to around 10,000 crores in 2018. It stayed to around 12,000 crores in 2019. In the COVID year, this incremental went down significantly, but then this number was almost equivalent to what the market had shown in the year 2017. In the peak months of COVID, that is, this year had those peak months, April, May of COVID, where the incremental almost reached to around 22,000. Now, we do not expect this type of incremental repeating this year, but then there will be a good amount of consideration that we will have to look at the long-term trend of the market, the dip and the sudden hike, and then arrive at a number. Now, the number that we have arrived at is a mathematical calculation of what the growth may look like. This, over and above this calculation, we need to look at certain other disruptions or certain other phenomena which may impact the market. So first I will share with you the mathematical number that we are looking at. So if I were to look at the projection of the market for Jan-December 2022, the market should end somewhere at around 171,000 crores. And this is in line with the normal trend. We are looking at the line trend as well. There was a small dip which we had seen in 2021 and this, 2020, and this dip would get corrected. And the same thing would apply across the majority of the therapies. So if I were to look at the mathematical calculation in terms of line trend, long-term COVID disruption, and how the market has behaved in the last 4 to 5 months, this is where we would arrive. And this is how the growth of the market would look for the IPM and the top 10 therapies. However, this is just a mathematical calculation. There will be other impacts that one will need to keep into consideration. The NLEM impact, where a significant chunk of the therapy areas or significant chunk of certain categories will have a price hike beyond 10%. There may be a strong seasonality trend. If the monsoons in the second half of the year, if the monsoons are good, majority of the disease trends would revive, and probably we may see more incidences where therapy areas like anti-infectives, gastro, nutritionals, respiratory, pain may pick up well. And these therapy areas, the top 10 therapy areas, they contribute to around 90% of the IPM. And within this, the acute portfolio, if it picks up well, it will further fuel the growth of the market. So basically, the market growth, which mathematical calculations is showing to be around 2.5%, it may actually go and reach around 5 to 7%. But this we need to wait and watch for another 2 to 3 months where the market would end. Now, this was about the growth outlook for the market. Then we thought about doing little different analysis for the top 40 companies and not restrict this analysis to the top 40 companies. We focus on some more upcoming corporates as well. This is the normal presentation that we have where we look at the top 20 players, how they have performed. We may focus only on the performance for the month of May. Now, on an average, the market has shown a value degrowth of 3.3% and unit degrowth of 10.4%. However, there are certain companies, despite these challenges, they have shown a commendable performance. The ones which I have highlighted in green color, Sun, Mankind, Torrent, Intas, and IPCA. These are the companies which have managed to show a robust single digit or a slightly higher single digit or a double digit value growth, and in some instances, a strong unit growth as well. Now, since we just focus on the performance for the month of May, probably we miss a picture in terms of longer trend lines. So these same companies we have looked at how these companies have evolved over the last 5 years. And in face of COVID, if I were to compare their performance against their peers, how does it look? Now, what I have done is I have kept the base of May 19, MAT May 19 constant. And we have looked at how the turnover of the company has increased. So for May 19, it was 1.1 times for the IPM of what it was in May 18. In May 20, it was 1.2 times of May 18. In May 21, it was 1.3 times. And in May 22, it was 1.4 times of what it was in May 18. Now, if I were to keep this as the benchmark, IPM as the benchmark, and if I were to let me look at the different companies, how they have evolved. So I have kept two benchmarks, the indexing of May 22 against May 18 and the 5-year CAGR of the company. Now, companies like Mankind, Torrent, Intas, Macloids, Aristo, Emcure, IPCA, among the top 20 players have fared relatively better in terms of increasing the turnover or multiplying the turnover as compared to what it was in May 18. And if you look at the CAGRs of these companies as well, as some more companies, the CAGRs of these 5-year CAGRs of these companies are above the All India IPM average. If I were to look at the next 20 corporates 20 to 40, again I see certain companies like Ajanta, La Renault, Hegde & Hegde, Corona, Systopic. These are the companies which have managed to have a relatively better performance in terms of growth for value as well as unit growth. Double-digit growth shown by Ajanta, Laranon, Hegde and Hegde. Corona also the growth on a higher side, and Cystopic also a good double-digit value growth. If I were to look at the multiplier effect of these companies, if you see companies like Eris, Cadilla, Ajanta, Laranon, Blue Cross, Hegde and Hegde, Corona, Medley, JB Chemicals, Apex, Cystopic, all of them have multiplied better than the IPM in the last 5 years. And also, if you were to look at the CAGR of these companies, it has been on a slightly higher side than the IPM. Now, in the challenging years, if you see typically these companies where IPM showed degrowth or lowering of growth, in the challenging years, these companies continue to fare well. Probably they had the right portfolio with them, but then in the challenging times as well, these companies continue to fare well in terms of growth. Now, we thought about looking at some more corporates beyond the top 40. Now, in terms of turnover, these corporates may not be very big, but what we need to see is how much they have multiplied themselves. So these companies, all the companies like Boehringer, Win, Fords, Centaur, Danone, Pharmed, RPG, Merck, Tablets India, Leaford, East India, Samarth, Serdia, Unimed, KLM, Alnish, Lloyd, HBC, IPCA, Fincure. In terms of turnover, they may not be very big companies, but where they were in May 18 and where they are today, they have almost, some companies like Danone, Merck, the part that we capture, Unimed, Alnish, Lloyd, they have almost doubled, or HBC Life Sciences almost tripled in terms of turnover. In the COVID times, it is these small players who really did not have that distribution, procurement, production might. These are the small players which suffered a lot. The small players suffered a lot. If I were to see this analysis for the entire smaller turnover companies, probably we would have many companies having negative numbers over here. But these companies managed to continue and grow positively even in the tough times. Their average CAGR, the average 5-year CAGR, 5-year CAGR that these companies have shown is much better than the IPM CAGR of 5 years. Some more companies, in terms of turnover, they may not be even 100 crore, they may be 30 crore, less than 50 crore, but we try to focus on their multiplier, and we are seeing good number of companies, Menardi, MSN, Linux, Kepler, almost doubled in the last 5 years. Jagat, Seagull, Elan, InnoCare, Adroit Biomed, if you see, it has almost tripled in the last 5 years. If it's a 62 turnover company today, so it would have been probably 20 crore turnover company, and it has reached 60 crore in just 5 years time. So these are the companies which in terms of turnover are relatively smaller, but they have managed to multiply their turnover to a great extent in the challenging COVID situation. Coming to the top 40 brands, in the top 40 brands, we are seeing Glycomed GP, Augmentin, and Mixstar. They retain their 1, 2, 3 slots at a MAT level as well as for the month. There are certain brands which have jumped up in ranks as compared to MAT. So Manforce, MAT rank is 8, whereas for the month the rank is 4. Thyronorm from Abbott, MAT rank 12, and for the month the rank has 7. Rosuvac from Sun Pharma, for the MAT the rank is 16, but then it has a rank of 8, which is almost 8 ranks up from the MAT rank for the month of May. Among the next rank 21 to rank 40 companies, Orofor XT, Pandy from Alchem, Dexorange from Frank. If you see the gap, the rank at a MAT level is 22, 26, 31. Whereas for the month, the ranks are 16, 18, and 25. So significant jump in ranks for the month of May for these brands. Now, if I were to talk about the key takeaways, the IPM has bounced back well in the month of May. Price is the key influencing factor driving the growth of the market. NLM impact, wherein we are looking at price hike beyond 10% in certain categories and stronger seasonality trend, may take the market growth to 5 to 7% in the year Jan-December 22. Some of the top players have managed a robust value and unit growth for the month despite challenging market growth. And there are good examples of big players who have managed the COVID tide well and have shown a 5-year CAGR better than the IPM. Glycomed GP, Augmentin, Mixtard maintain the top slots at the month and the month level, MAT and the month level. So this was about how the IPM has performed. We are, as I introduced earlier, we are starting a new initiative wherein we are looking at taking some interesting topics for the pharma industry, and the topic for the month is partnerships in pharma. This topic will be taken elaborately on 20th June, but I would like to have certain insights to the topic. I would like to give some pointers, what we will be covering in this topic on 20th June. So partnerships in pharma in 2020, in fact, partnership is nothing new in pharma, but we have seen that these partnerships have become even stronger in the COVID times, especially where companies are trying to leverage each other's strength to fulfill the need for both innovation and keeping up with the huge surge in demand for the existing and new drugs. So what we have seen recently is certain global players like Pfizer, Moderna, J&J, Astra, BioNTech, Gilead, Eli Lilly, especially in the COVID times, have partnered with many domestic players like DRL, Zydus, Biocon, Cipla, Sun, Serum Institute to ensure that there is a good partnership in terms of research, production, and availability. I may not have covered all the companies in terms of global players and domestic players, but these are a few examples. In fact, there are many more. What we will be covering in the webinar are certain case studies. However, even going to the case studies, a little understanding about the partnerships and collaborations, what is the focus that they are having in the Indian pharma market. The focus is either making acquisitions based on therapeutic segments, divisions, and brands, licensing patented products, divesting non-core divisions or brands, riding the private equity interest in the API, niche products, and contract manufacturing, investing in biosimilars and biologics, and signing collaboration deals focused on research and development. I'll just take you through why these partnerships are being made and some examples. When we talk about acquisitions focused on therapeutic segment, we have seen that large and mid-sized Indian companies are acquiring the existing divisions of smaller Indian companies as well as those of foreign companies to get direct access to established product domain in specific therapeutic segments. Whereas some prefer brand acquisitions to fill the product gaps in their portfolios and strengthen the weaker divisions. So Indian companies have already identified that these are my weak areas, this is where I need to fill, and they identify the companies or the divisions or the brands which help them to fill up that lacunae. Certain examples are DRL's acquisition of Wockhart's brands business divisions, Mankind's acquisition of selected brands of DRL, Cipla's acquisition of Vysov M from Novartis, Eris acquisition of Oaknet, IPCA's acquisition of, IPCA having stakes in Tropic Wellness as well as Leica Labs to strengthen the nutraceuticals business or the injectables business. When it comes to licensing patented products, we have seen three approaches. Either the companies acquire exclusive marketing rights, wherein the innovators offer their license to offer to license their patented products and give the exclusive marketing rights for particular geography for an agreed period, which is some examples are Boehringer Ingelheim and Lupin's tie-up for Gibtulio and Azaduo, Glenmark's tie-up with Torrent for the remogliflozin market in India. Second approach is inking non-exclusive agreement. Whereas when we talk about licensing, majority of the times we used to hear about exclusive agreements, whereas the approach in COVID times has been non-exclusive agreements, wherein due to pandemic, companies have entered into non-exclusive agreements to meet the increased demand for certain drugs. It is very difficult to partner only with one company and ensure that the increased demand is met. Gilead's licensing of remdesivir, Merck's licensing of molnupiravir, and Eli Lilly's licensing of baricitinib are some of the examples. The third approach is entering into off-patent licensing agreements, wherein companies are open to license non-patented generic portfolios as well. Abbott has signed an agreement to take over the distribution and marketing for MSD's generic portfolio in India. This is one example. The next approach for partnerships is divesting in non-core divisions or brands. A good number of Indian and foreign companies diverse their non-core divisions to focus on their main portfolios. Typically, a good number of established Indian companies, they have started with mass market segments, either in anti-malarials or in anti-asthma or anti-infectives. But in the last 10 years, everybody has realized the opportunity in the cardio-diabetes segment or certain specialized segments. Now, having your field force, the talent that you require, internal talent, external talent, the specialty that you need uh, for developing this chronic portfolio are two extremes, and you really cannot focus on both. That's the reason why, if they have a mass specialty business, which is still a strong business, they prefer letting out this business to another capable company, which can manage it well. Sanofi has divested its nutraceutical business to Universal Nutrisites. Pfizer sold its non-core brands to Abbott and Sun Pharma. Glenmark has also sold its Gynac division and earlier the Ortho division to Integris to focus on certain therapy areas of its interest. Then we have private equity investors which are looking to leverage Indian pharma companies' chemistry leadership for direct exports of APIs to global markets, along with growth opportunities in the custom manufacturing of drugs and intermediates under the CRAMS model. Some examples are Carlyle collaborated with Hyderabad-based drug maker VH Life Sciences to jointly set up an integrated generic pharma platform in India. It also acquired a majority stake in Sequent Scientific and 20% stake in Piramal Pharma. PAG has agreed to acquire an undisclosed controlling stake in Acme Formulation, and Advent has acquired a controlling stake in ZCL Chemicals and Bharat Serums and Vaccines. Next is investing in biosimilars and biologics. As you see, in fact, even in COVID times, it has become more prominent that India is one of the most leading manufacturer of biosimilars. It has a thriving domestic market with 93 total products approved throughout 2019. Indian companies collaborate with European and US companies to develop biosimilars and biologics for global markets. In fact, Biocon has been a very strong player in this area, wherein it has entered agreements with Clinton Health Access Initiative for cancer biosimilars in more than 30 countries in Africa and Asia. It has collaborated with Viatris, earlier Mylan, to co-develop a portfolio for biosimilar antibodies and other recombinant proteins along with insulin analogs. It has also joined hands with Sandoz to develop, manufacture, and commercialize multiple biosimilars in immunology. And Aurobindo Pharma is another example where it has acquired biosimilar products from TL Biopharmaceuticals. The last approach, I have just discussing a few approaches, but the last approach is signing a collaborative deals focused on research and development, wherein we have seen Medgenome tied up with US-based EMIS for rare diseases. Syngene and Deerfield Discovery signed 5-year agreement to jointly advance therapeutic discovery projects. Glenmark has signed an agreement with Boston-based APC Therapeutics for the development of a potential cancer treatment, and Sun Pharma has joined hands with Spanish firm Almiral for development and commercialization of tildrakizumab. So, when we're talking about partnerships of pharma, there is a lot of buzz that is happening around partnerships in this industry. Looking into all this, and we had requests from many clients that why don't you have some discussions around this? We have arranged for a webinar on 20th June to discuss on some of the most prominent approaches and interesting case studies. The registration for this webinar will be shared by 15th June. And if you have any more suggestions, we just thought about sharing what we had in mind, what approaches and examples we had in mind that we could discuss in this webinar. But if you have any other suggestions, please feel free to connect with me on my email ID, sheetal@aicbawacs.com, and send your suggestions. Let us collectively make it a very interesting webinar, which would be a win-win and a lot of learning session for both of us. So with this, I thank all of you to spending this Monday morning with me. and feel free to reach us for any more suggestions from your side. Thank you so much for your time.